Hi, I'm Peter Williams, founder and CEO of ACE, ACE Portal, the hub for private placements. We're doing a series of videos to bring you up to speed on the private capital markets with the idea of getting you more informed about what the private placement market is and how you might participate in it as an investor. These days, the term crowdfunding is thrown around a lot. It's one of the hottest terms in the finance industry and also the startup community. But frankly, it's been used in a whole lot of contexts. Anything from fundraising to support various relief efforts, to funding an artist to do a documentary, or even investing in a cool new product via Kickstarter to help a company get started. I'm going to be focusing on the finance and investment aspect of crowdfunding, which the Securities and Exchange Commission is currently trying to define. So from an investment standpoint, crowdfunding is basically an opportunity for all types of investors to invest a small amount of money, typically in an early stage company, a private company, to help that company grow. And the first topic I want to sort of discuss is really what is a private company. And a private company is kind of defined by what it is not, which is a public company. I'll kind of run through each of those. So here on the board we have public company and private company. A public company is probably what you're most familiar with from an investment standpoint. Requires a lot of disclosure. The Securities and Exchange Commission requires quarterly disclosure as well as updated regular disclosure on the company and its financials. It's almost always traded on an exchange, such as the NASDAQ or the New York Stock Exchange, which typically means it's highly liquid. So, for instance, General Electric trades approximately 40 million shares a day. So when I refer to liquidity, that just means the ability to buy shares and sell shares very, very easily. You can go on to any online brokerage account and buy and sell shares of public companies pretty easily. Access to information. So all investors have the same access to information. So you could go on and read quarterly statements, annual reports, regular news filings. The premise that all these investors have access to the same information is core to being a public company. And then there's been a lot of interesting derivatives around trading these securities as well, which causes a lot of complication, frankly, in the public markets that we won't get into in this series. And then they're open to everyone. So basically anyone that can open a Charles Schwab account or an E-Trade account has access to public companies' securities. Private company, on the other hand, is more limited, and like private means, it's much more limited. The SEC requires that there's less than 2,000 shareholders in a private company. They're not traded on an exchange, although there are interesting new companies starting up trying to increase the liquidity and the ability to trade in and out of these securities a little bit more liquid than it has been in the past, but overall far less liquid than, say, a GE that trades 43 million shares a day. And they're not available to everyone, and we'll get into this in the next kind of series, but for the most part you need to be an accredited investor or greater to invest in these securities, but for a few small exemptions that are being put forth by the SEC now for crowdfunding. And overall, it's more of a fundamental investment, meaning without the ability to trade derivatives and options around these companies and the lack of liquidity, you really need to invest in the company, the management team itself, and see things over a more medium to long-term investment horizon, as opposed to a public company where you can get in and out quickly and trade all kinds of derivatives. You may not know it, but it's actually a $1.2 trillion annual market. So although it is a niche business, it's actually quite a large market. So when a public company sells securities to the public, it's considered a public offering, and a private placement is when a private company sells securities to investors.